Stanley Druckenmiller should be an example for everyone who tries to make money on the markets. He never seems to be stressed, is not showing much emotion when it comes to picking stocks, and his track record is exceptional. When he bets big. He will not be shaken if a position temporarily goes in the other direction, but as soon as he changes his mind about the company he invested in, he is out of the position immediately. He had one of the best and most controversial investors as his mentor, the guy who changed positions worth billions of dollars because he felt some pain in his back. Over the years, Druckenmiller showed that having all your eggs in one basket can be a great strategy if you're absolutely sure about the basket and you have the time and nerves to watch that basket. So let's dive into how he became who he is today, what's his edge, what he invests in now, and where he sees the economy going. Every successful investor has a different story, but the family they grew up in matters a lot. Druckenmiller was born on June 14, 1953 in Pittsburgh, Pennsylvania. He grew up in a middle-class Jewish family. His father was a chemical engineer and his mother was a homemaker. Druckenmiller has credited his parents for planting in him the values of hard work, discipline, and integrity, which he believes helped him a lot in the building of his empire. From a young age, Druckenmiller developed an interest in finance and investing. He was exposed to financial discussions through conversations at the dinner table, as his father often discussed the stock market and investments. This early exposure sparked his curiosity and set a good foundation for his future as a money manager. Druckenmiller attended Mount Lebanon High School in Pittsburgh, where he excelled academically. He was a good student. He excelled especially when it came to mathematics and problem solving. Druckenmiller's intellectual curiosity and drive to succeed set him apart from his peers. After high school, he enrolled at the Bowdoin College in Brunswick, Maine, where he pursued a degree in English and economics. During his college years, he further developed his interest in finance and began exploring investment strategies. Although he initially intended to pursue a career in law, his passion for finance ultimately won out. He didn't go to an Ivy League school, as a lot of fund managers do, but as you will soon see, it was never a problem for him. After graduating from college in 1975, Druckenmiller began his professional journey in the financial industry. He joined Pittsburgh National Bank, where he gained experience in credit and research departments. This early exposure to banking and financial analysis provided him with a solid foundation and practical knowledge in the banking field. Druckenmiller initially joined PNB in an entry-level position. His responsibilities involved conducting financial analysis, assessing creditworthiness, and evaluating risk profiles of different companies and borrowers. He rose quickly through the ranks at Pittsburgh National Bank. He was promoted to research director at age 25. Druckenmiller worked alongside seasoned professionals at PNB who provided mentorship and guidance. This allowed him to learn from their expertise and gain practical knowledge about banking operations, risk assessment, and financial analysis. During his time at PNB, Druckenmiller began actively observing market trends and studying the performance of various assets. This experience fostered his interest in trading and investing, prompting him to dive deeper into understanding market behaviors, economic indicators, and investment strategies. Druckenmiller's tenure at Pittsburgh National Bank served as a stepping stone in his career. It was during the time that he developed a solid foundation for his future work. The experience, knowledge, and connections he acquired at PNB laid the groundwork for his future success. His reputation as a talented and ambitious individual began to grow, and his work at PNB brought him into contact with influential individuals in the financial sector. In 1981, when he was 28 years old, he launched Duquesne Capital, where he was able to use his economic and equity research background. With his own firm, he had a great amount of success from the get-go. Not long after starting, his impressive returns attract the attention of an investment company called Dreyfus. Dreyfus is a prominent mutual fund company that offers a wide range of mutual funds across various asset classes and investment strategies. They were impressed by Druckenmiller's skills and they offered him a position to manage some of their funds. Under Druckenmiller's management, Dreyfus benefited from his expertise in macroeconomic analysis and his track record of successful investing. He managed the Dreyfus Appreciation Fund and the Dreyfus Founders Fund, both of which experienced a significant growth during his tenure. One of the funds he managed was up 40% in just 3 months after starting at the firm. With his success at Dreyfus, he built an even stronger reputation for himself as a clever investor, which also caught the attention of George Soros. Soros had a very different background than Druckenmiller, but at the same time their views were similar. It was 1988. Soros has been running his fund successfully for almost 20 years and had had enough of managing money at that point. His goal was to give away $500 million per year, but he knew he needs a successor who can manage the fund in a way that will produce that $500 million. So he approached Druckenmiller with the offer to be the chief strategist of the Soros Fund Management. Druckenmiller adopted a macro trading approach focusing on understanding global macroeconomic trends and their impact on financial markets. This approach involved analyzing interest rates, currencies, geopolitical events, and government policies to identify investment opportunities. One of Druckenmiller's most notable trades was related to the fall of the Berlin Wall in 1989. Druckenmiller recognized that the event would have far-reaching economic implications. He anticipated that the reunification of East and West Germany would lead to significant economic changes and opportunities. Druckenmiller saw the potential for a surge in German and European markets, and he executed a series of trades to capitalize on this expectation. Druckenmiller's trades primarily involved going long on German assets such as stocks and bonds, and related European assets. By taking long positions, he was essentially betting that the value of these assets would increase as a result of the economic integration and potential growth in the region. During the fall of the Berlin Wall, Soros spent most of his time in Eastern Europe, so he was able to get the right information before anyone else, which turned out to be a very profitable move for the fund. But the trade that made both Soros and Druckenmiller famous was yet to come. The trade that made Soros the man who broke the Bank of England and secured Druckenmiller's reputation as one of the best money managers was the bet against the British pound in 1992. Anticipating that the pound was overvalued within the European exchange rate mechanism, Druckenmiller and Soros took a massive short position against the currency. When the UK government was forced to devalue the pound, they made substantial profits, earning billions of dollars and solidifying their reputation as top currency traders. Druckenmiller understood that financial markets are dynamic and subject to constant shift. He recognized that market conditions can change rapidly due to various factors like economic data, geopolitical events, policy changes, and shifts in investment sentiment. Instead of rigidly adhering to a single investment approach, Druckenmiller was flexible and open to adjusting his strategy as needed. Druckenmiller's tenure at the Quantum Fund was marked by outstanding performance. During his 12 years at the fund, the Quantum Fund reportedly achieved an average annualized return of around 30%. While Druckenmiller was a great trader before he partnered up with Soros, he always says that he learned a lot from him. Soros developed a unique investment philosophy based on his concept of reflexivity, which states that market participants' biases and perceptions can influence market prices, creating feedback loops and opportunities for profit. He believed that the market prices are not always efficient and can be driven by irrational behavior and misconceptions. Based on this concept, in the late 1990s, Druckenmiller had expressed concerns about the high valuation and speculative excess in the technology sector. He believed that the valuations had become detached from fundamental realities, and he expressed skepticism about the sustainability of the tech-driven market euphoria. So he opened a $200 million short position in the Quantum Fund against a dozen tech stocks. But the $200 million position turned to a $600 million loss within 4 weeks. After getting to the long side of the market, he turned a 16% loss into a 40% profit for the year and closed the positions. But that's when he made a big mistake. After he sold everything, the young traders he hired kept making 8% days on their smaller accounts, which drove him crazy. He could not handle the FOMO and invested close to $6 billion to tech stocks. He missed the top of the market by a few hours, and it was a very painful lesson and an even more painful $2 billion loss. Even though he knew he should not get back to the market, he got too excited when he saw that people are making money. And this is when emotions came to play. Druckenmiller knew that he was an emotional mess at that time, so instead of trying to make up for the huge loss, he decided to take a break from trading. He did not allow himself to watch TV or read any financial newspapers, so he went on a true break, which everyone who is active in the market should do once in a while. After he came back and saw that the market almost completely recovered while oil, interest rates, and the dollar were up, and all of his clients, mostly smaller business owners, were telling him that business is terrible, he started thinking. The earnings prediction were up 18%. But historically, when the dollar, interest rates, and oil is up in a year, the next year is terrible in terms of earnings. So he bets on US Treasuries and makes 40% in the fourth quarter, turning the whole year around. In August 2010, Druckenmiller closed Duquesne Capital for outside money and turned the fund into a family office. Through the family office, he manages his own $6.4 billion. He built a large portfolio of stocks, including Coupang, Nvidia, Meta, Google, and a lot of other names from several industries. He has a very alarming outlook on the longer-term state of the market, claiming earlier in the year that there's a high probability the market will be flat for the next decade. Druckenmiller has also conceded that this is the hardest market to forecast that he's ever seen, given the wide-ranging variables of surging inflation, rising interest rates, and the Ukraine war. There's also a growing deglobalization trend that is taking place in many developed countries. The fact that Druckenmiller believes that we're heading towards very challenging times, but still holds a stock portfolio worth over $2 billion, and almost all of the stocks he holds are up double or even triple digits, shows that he's an extremely sophisticated investor. Most successful fund managers believe that a crucially important factor when it comes to managing money is the investor's personality. It is no different in the case of Druckenmiller. He is recognized for his disciplined and analytical approach to investing. When he wants to invest into something, he dives deep into the company, does his research, and he only invests when he has absolute certainty. If anything changes, he is willing to adapt his strategies based on the changing market conditions and adjust his positions as needed. He is not swayed by market consensus. He does not seem to care what the market thinks about an asset. If he sees an opportunity, he will go all in, and he's always willing to change his mind. Most of you are probably not full-time money managers. You just like to invest and want to increase your chances to invest in the right assets and eventually make more money. So here are a few things we can all learn from Druckenmiller. Don't go after the crowd. If everyone talks about something, it's probably too late to get in. People who had no idea about crypto were talking about it at the end of 2021, and we see what happened. Don't be afraid to change your mind. Imagine you did your research, you like a company you invest in, but a report comes out in which you see that the company is focusing most of its resources on something you don't necessarily believe in. So your belief about its future has changed. In a situation like this, you should consider selling. Keep the risk-reward ratio in mind. When Soros and Druckenmiller bet $10 billion on the fall of the British pound, they did not risk much. The chances that the pound suddenly wakes up and goes to the moon was very small. So even if the UK would have stayed in the ERM and the pound were able to hold its value, they would not lose a lot of money. And last but not least, stay humble. Thank you for your time. If you enjoyed the video, please subscribe to my channel, and I would also love to hear your thoughts in the comments.